Okay, here's our update on broader commodities, and this is September 4th. It is the day before Labor Day here in the U.S. And last update was a long time ago, like sometime in April. As always, looking to take a look at the link in the description to check out that video where I talked about what oil was looking like, and I've tweeted about this since. But it looks like we had our 3-year cycle top back in March, right? This big, long upper wick, always a really bad sign. We had a similar kind of thing with gold. This was all around the Ukraine war, if you remember that started around February. And so we really spent, we actually made a lower low that April, right? Just wait, actually, did we? So 92.96 versus 93. Yeah, we did actually. So we made a slight lower low that April, but then recovered and actually got some bullish follow through. And that looked kind of promising in real time for sure. But still, it was all within the range of this upper wick. And that's the pernicious thing about these upper wicks, right? Because it basically, price discovery has to restart. Because how likely is it for you to get outside of the range of this huge candle here? So again, if you think about 3-year cycle, that's what I have marked here. Around month 36, you would expect would be around April of 2023, which would be your around month 36. So these things don't have to go down in a straight line. If anything, we've been going down for 3 months straight with making lower lows in red. So you imagine we get a bounce at some point, maybe something like that then resolves, something. The thing about that too is we could also have something like some kind of triangle consolidation, so that we don't make massive lower lows, right? So like something like this, right? Let's say we just kind of consolidate here and not really do a whole lot, and then just stop like right there, right? And then we get our acceleration. And you could see that playing out. And that way, inflation doesn't, prices don't come down by a ton because oil is still staying relatively elevated in the 80s, maybe even 90s, but still a lot lower than the 129. That's the thing to keep in mind. It went all the way up to 130. And so down here at 90, there's a lot of room between here and that peak for it to not go back to all-time highs, but prices to still stay relatively elevated. And if you look at a weekly chart, you can see this has the look of a bear flag, and then last week you had this bearish outside candle, and now you've opened as an inside week. That's just your action today, as of today, because the markets are trading today, even though it's Labor Day tomorrow. Futures are open as well. The ES, the S&P 500, and the other indices. And so this definitely has a look of a bear flag that wants to break down. And if we think about where we are in the cycle count, so if we're calling that was a DC, what's our last ICL? We are top on week 9. That would put this at week 21, right? And so we could still continue to fall for quite a bit. And the thing about oil is it generally, you'll see this called out by many analysts, cycles analysts. It generally doesn't follow very regular cycles. Like gold is usually in the 30 to 33 days for a daily cycle, that kind of thing. This thing can be very squirrely and kind of all over the place. And so this last cycle more or less was 19 weeks. You can see you had a pretty short decline, top on week 14. And again, this top here is that top on that monthly chart, multi-time frame analysis, right? This is your weekly chart. This is your top. And then we had this like double top lower high situation, right? You could draw a trend line, and that's kind of the point of a trend line, right? Like you could draw a trend line down that, right? Like clearly we're making lower lows and lower highs, right? This trend line would denote those lower highs, right? As we make highs, it's not able to make that higher high above a previous high. So we're still pretty late in the weekly cycle still. So it's that kind of situation, similar to what I mentioned about equities. We're clearly in a weekly cycle decline, but maybe not the time to press shorts because, we've had a pretty strong downdraft. And so at the very least, you'd expect, a little rally, a lower high. And so that's the picture for oil. Again, very likely we've had our 3-year cycle high back in March. We're now descending into the 3-year cycle low. That would not be due until April. And so let's just switch over to agriculture. So that's DBA. We'll look at that ETF. And we'll start with just the monthly, and then we'll zoom into the weekly, see if there's anything kind of actionable. And so I'll just kind of do this in real time. So similar kind of thing. We had our major low April 2020. This was a little bit of a double bottom, right? So that was, what is that? 1315, 1320. So actually our low came in June. So we bottomed in June, and then we had our high in May so far, right? So our high came in May so far, and that was month 22. So far, that same, right? So same exact principle, the same way like for oil. In this case, we bottomed a little bit later, and this top is not the same. So oil topped in March, and this topped in May. So that is really interesting. And that's so far. Now, here's the thing, like, again, so this is like just understanding what does it mean for something to top. It means it, a swing high was created, right? Because this candle marks the high. So we made a high at 2301, and the low of this candle is 2127, right? And so once we went below that level, that created a swing high on the monthly chart. And that's what we did in June. Big red bearish candle sliced right through that level, closed well below it, didn't even come close to retesting it just yet. And then we got bearish follow through, but then we got a rally. And that next month, this April, or excuse me, August, this is, again, so thinking very tactically, like very specifically here, this is actually a swing low, right? So, which is the opposite of this swing high, right? So once we go above the high of this candle, which marks the low, so this candle marks a low of 1929, and the high for this candle is 2052. So once we traded above 2052, we had a monthly swing low, which means we're potentially beginning a reversal to the upside on the monthly level. We're now in inside month with September, still incredibly early, obviously just a few trading days. And what we want to see, obviously, is make a new high above this monthly level, above this August high, which was 2084. So once we're above 2084, now we're potentially starting to reverse on the monthly level. It's entirely possible that, we get a really early bottom. I don't know, that seems unlikely to me that we're going to get a 3-year cycle top on month 22, and then we're going to get our low on month 24, right? So this is month 22. That's 23, 24. That was the bottom seems unlikely, but if it is, then it is. The price action will tell us that in real time as we sort of see it unfold. So those are the levels you really want to watch. That 2084 to show that you're making new highs on the monthly, and you really want to stay above that 2055 level, which is your sort of swing low on the monthly level to denote that, again, you're potentially reversing that monthly downtrend. And then we want to kind of attack that 2127 level. So this is agriculture as a whole. That's the trend to be aware of. Again, doesn't mean we have to kind of collapse into a 3-year cycle low, but it does mean the easy money has been made. And it makes sense. I mean, look at this. Look at this furious rally. And that's after this really bearish period. I mean, I'm not going to go through all the detail, but like you can kind of see, I can kind of see, you have a cycle from here to here, right? That's 24 months. You can see a cycle from there to like there. That's 20 months. You can see something from like there to like there. And you can see these are like very feeble rallies. This was a rally that got stamped out. This was a rally that got stamped out. this was a rally that got snapped out. This was actually a more convincing rally, but it eventually led to more cascading. And so now that's the thing. That's the thing about this, right? Like, if we're getting a 3-year cycle top, that might be okay because it might mean that we're now gonna, like, even if we get, we descend into a 3-year cycle low, we're still gonna have a multi-year period of moving higher, like the reverse of this, right? Like, so instead, like this, right? So like this peak was in 2011. So we've been moving lower for well over 10 years and finally reversed in that, almost 10 years, finally reversed, June 2020. And then we're consolidating now. We're consolidating those huge gains. And what was that increase? Let's see, in terms of percentages. So a 70% increase. That's a pretty big increase for an entire index, of agricultural products. And so let's look at something like wheat. So it's the same kind of idea, different details, if you will, right? So let's just see here. So from that bottom to there, that's 21 months. And then we consolidated inside this range. And then you can see we broke down below here. And this is actually an ETF you can just buy. And so the swing high happened below 920, right? And where did we peak? So 1275. And we're right down here at about 8. So we're talking around 50% upside to get back to that local high, that recent high. But we've also already lost so much value if you were still holding from there. This is obviously really bearish, and what you really want to make sure that we hold, that line in the sand, is around that 710 level. So right now we're at 831. That wouldn't be great risk reward, like a place to set a stop, for instance. So I don't really see an edge here personally. And the other thing I call out is obviously this has big implications beyond just like trading. If these things are going to consolidate, that might be, at least neutral so that food prices don't continue to kind of skyrocket. But it may mean that, higher prices are more entrenched. So even though we consolidate for the next, let's say, 6 to 8 months, we may still see higher and higher prices for the next 2 to 3 years. Now, that would be uber bearish in the end. And again, you can see this has had a long period of decline. And so this was a pretty furious rise. So that index rose 72%. What did wheat rise from, let's say, here? 160%. So wheat specifically did pretty well. And let's see, that's not corn. Let's see. Let's actually look at the ETF. So same company offers this ETF. It's called Securium. So same idea, corn ETF. And this is not a super liquid ETF, I will say for sure. And so be careful. So that rallied 160%. So very similar to wheat. Again, so not surprising that you would see a consolidation of gains. Now for corn, my God, look at this beautiful swing low in place, actually. I mean, right now we're an inside month, so not super actionable, like right now. But that July candle that marks the low, right? The high for that candle is 25.79. And we right here sit at 26.61, so well above that level. So this thing bottomed around the 11.50 level. So definitely had this period of consolidation here. So 1 month, 2 months, 3 months, 4 months, 5 months. And then we had another move higher. So now we've been consolidating for about 4 months. This is month 5. Again, same kind of idea though. If we're thinking about longer term cycle, these things generally move together. So now it's a question of like, where was the bottom here, right? Like, look at this. Like, wow, it really respected this like 11.50 level. So if we just call it like here, that's around 21 months. Same kind of idea as wheat. And let's just peek at the weekly level. So on this one is actually sitting on a weekly swing low. It's week 1, 2, 3, 4, 5. So this would be week 7 starting right now, starting this week coming up right after Labor Day. So week 7 of a weekly cycle. Let's just pop into wheat to see what that is, just to get a little micro, more actionable. Ooh, wheat does, and this is why looking at a chart on multiple time frames is helpful. Wheat is looking really ugly right here on the weekly level. I mean, this looks like a classic bear flag looking to break down. And we knew that because the monthly chart didn't look super amazing either. But I mean, this really puts it in perspective for you. So that also tells you something, right? Like corn is much stronger than wheat, which is, really kind of telling that there's that kind of that level of dispersion at this point. What else do we want to look at? Let's look at let's look at platinum really quickly. This is in the category of things that's kind of puking a little bit. So let's look at the long-term cycles. So this is one that have been tracking, and just haven't really updated much on because there's not much to update. It's in long-term decline. The long-term decline continues. And so this one, if we go back to, let's say that, that COVID bottom, like most things had, that was at 565 thereabouts, right? It then rallied for 11 months, right? Had a top on February 2021. That was month 11, as I said. And then we consolidated for these 3 months. And then we began a major breakdown, right? And it finally appeared to bottom. And I'll add the moving average so we can kind of follow along there for the folks in the back. It appears to have bottomed on month 21, which was December 2021, right? So we had a cycle that basically started right after the COVID crash, went for 21 months, bottomed on December 2021. And then we had a pretty nice looking rally, right? And I always remind, when you see a large upper wick like this, you have to remember that candle was bright green at one point. Wherever you see wick, that was the body of the candle. It was bright green. It was super bullish. That's what this candle looked like at one point. And then we failed massively all the way out the other side. Bearish outside candle. It's a great strat concept. The idea that you can break both sides of the range. You can make a higher high and a lower low relative to that previous candle. And again, in this case, it's on a monthly level, so incredibly significant because it's a really, really high time frame. And what followed was essentially a waterfall decline, right? You had this, you had lower highs along the way, as you do, but from that level, how much did you decline? Let's see, right? Like if you even just take from the low of that candle, the decline from that alone has been 17%, which is a lot for, a commodity in just itself, not like a derivative, like a company that makes money off of it or something like that. And so really, really important to just get out of the way at this point. It's only month 9, right? Look at how long these things take to bottom. The last one bottomed month 21. The COVID crash actually was month 19 bottom. The one before that, month 31, month 25, month 24, month 19, month 19, month 24. There's a pattern here. It takes a long time. Now, it doesn't mean we're going, again, nothing happens in a straight line. We had this hot move here. We're going to have a move up again. But at some point, it's going to be, a move to kind of sell. So that's platinum. We'll look at copper next. And if we look at the weekly, again, I think, the picture should be pretty. I don't think you're going to learn too much more from the weekly level, but good to see that this swing high is what created all the mayhem. And then we've had just massive follow through. That's what's created that, monthly pattern that we're seeing. If we look at copper, also long-term decline on this one, monthly chart. So this appears to be month 13, top on month 7. And it depends on how you want to look at this. You could also look at this as actually just month 24, coming out of the COVID low, so month 24 of a 3-year cycle. I mean, look at the way this thing is falling out of bed. Again, I'll just remind, this is definitely going to print a lower high at some point, so we are going to get a rally. I mean, if we look at the weekly level, this one I had pointed out on Twitter was looking a little squirrely. You can see from the action today already, we're possibly going to put in a bullish bullish fake breakdown on the weekly level. So we'll have to see how this is playing out. Definitely suggests that we have a 3-year cycle top here as well. And I'll look at lithium. I know this is one that's of great interest to folks. Yikes, not looking great. Yeah, I mapped this out as to what the cycles are looking like. I'm thinking we could expect our next cycle low around October, right? And given we just printed a swing high here, then we're kind of descending. Looks like we've already kind of topped. And so we are in weekly cycle decline. So something I'd want to stay away from. I'll look at LAC, which is lithium. Yeah, so it looks like that probably also printed its weekly cycle low here, or weekly cycle high here as well. And that looks like it might not have a low until sort of late November. So that's something I am going to remain cautious on for sure. Anything else? Let me see. I guess we can look at palladium really quickly. So monthly chart. So this was a really big tell. Again, a lot of things did this. So March, it had that crazy violent move up. And I mean, same thing happened with oil, right? And this, like, look at this. My God. Again, this was really green, looked really amazing at one point. Now, our next big signal for the dam to break is breaking below 1528, which would kind of open the floodgates and basically put back on the table the idea of kind of breaking below that COVID low. Like, definitely putting that on the table. Not saying that we'll definitely get there, but it certainly opens the door, to be sure. I think that is... Yeah, I think that... Well, actually, let's see. Is there a good nickel chart? Actually, let's take a look at natural gas. Or, I mean, at least a representative of it. So, yeah, it looked like this thing, if we go to the date range, possible cycle top on month 20. We'll have to see. I think this is going to be highly correlated with oil. And again, you hear these fuel shortages, etc. We could have a situation where prices just remain elevated, but we don't make an all-time high. So we're just essentially consolidating. So that's the picture just across the board around commodities. If there's anything of interest that you might want me to look at, again, not necessarily specifically related to commodities, do let me know. Happy to take a look. Always interested to sort of apply these principles across the board.